ISACA Abuja Chapter warmly welcomes you to her 13th Annual Conference, ANCON 2021, taking place from the 4th to the 7th of October. Our theme this year is Building Infrastructural Resilience, the post-COVID-19 era. Over the next 4 days, you will connect with industry thought leaders, improve your knowledge, and grow your network. Join us online daily from 8 a.m. to 5 p.m. For more information, follow us on LinkedIn, Facebook, and our website www.isacaabuja.org. ISACA, advancing IT, audit, governance, risk, privacy, and cybersecurity.
The discussion we're having today is an interesting one for me because it's about memory, it's about history, it's about money, and it's full of fun. It's not the type of discussion we can conclude in the space, in the period of time you have given me to do this presentation, but then I still have a slide that can help us go through that discussion. So I'm looking forward to a very interesting session together with all of us. So just to lay the foundation for our discussion, we'll be talking about money, and we know that money is something that is as old as man, and is actually what people call money. That is money. And that is why just about anything you can think about has been used as money in history. And even in our contemporary time, I mean, money has changed so much. And that's why we're talking about a new form of money this morning, which is something that has impact on almost everyone. And for the central banks, money is also a very important tool, and also it's a public good. It's a public objective that is for central banks. It's a public good, and they've been doing this for hundreds of years. That central bank has been providing trusted money to the public, and it's for central banks. It's something that that they need to continue to do, and that's why providing cash for central banks is a very important tool. And we know that, of course, the characteristic of money, which is of course is a unit of account, a store of value, and a medium of exchange, even for settlement of financial transactions. So for you to have a working economy, money is actually the current that flows in the economy, and also transmit values. So for central bank, this is not something that can be allowed to be static, depending on the need of the people. So we can look at why money has been changing, and that's not far-fetched. I mean, people have been changing, technology has been changing. I mean, just everything we can think about has contributed to what affects money. And in some economy today, like the Sweden, it's even difficult for you to find physical cash, because the use of electronic money has so much increased that the common people barely carries cash. And even in the economies where cash is still dominant, the digital payment system are so advanced. Even in our economy in Nigeria here, you will notice that we have very advanced payment system. And some of these payment systems, they are driven by private entities. So we have very convenient and fast way of facilitating payments today. And that's why, in order for central banks to continue to provide these public objectives good to the public, I mean, the central banks also have to evolve. They have to change in several ways. And that's why it's not even surprising that you see, I mean, it's a global phenomenon that you see all central banks have been looking at the concept of central bank digital currency, even though for different reasons. So we can look at the concept of digital currency as a whole. And it's, I mean, you know, we have always had electronic money, but then in its usual manner, money is changing again. And we have a new concept of digital currency that is actually native to the digital platforms, in the sense that the underlying technologies are actually native to the internet. So some people, I mean, who ask questions about what the major difference is between the electronic money we have today and the digital currency that that is becoming more, that is gaining more attention these days. But basically, the electronic money that we have today, they are just they are record of balances. But with the emergence of some new technologies like DLT, tokenization, and smart contracts, there are more possibilities that you can achieve with digitizing money. And we are going to have opportunity to discuss a little about some of these technologies. But just to mention, DLT is an infrastructure and a protocol that enables simultaneous access, validation, and updates of record in an immutable manner that's characterized as ledger. So it's just a record of values that also, but in an immutable manner that multiple people can access and also validate the records. So for the purpose of our discussion this morning, we'll be categorizing digital currency into two big buckets, and that's the private and the central bank digital currencies. So, but to define the central bank digital currency, I mean, it's just a simple definition, which is just a digital representation of the sovereign money, which we already have. So it's just putting our legal tender in a digital version. That's the simple definition of a central bank digital currency. So looking at this diagram on the right to the screen, you will see that under the private money, of course, we have also other varieties. I mean, we have other type of coins, and we have the stable coins. We can discuss a lot about that, I mean, if we have the time. But our focus this morning is going to be around the central bank digital currency. And one important thing that we must keep in mind when discussing the central bank digital currency is the fact that it's issued by the central bank, and it's also a direct claim on the central bank that issues it. That's one important thing that we have to bear in mind. But you know, there are two different forms of central bank digital currency, if we are to categorize them into two broad forms, and that would be the wholesale and the retail. Of course, the wholesale is when it's being used among the financial institutions for various financial activities that happens within that space, including settlements and clearing and the rest of them. But for retail, is when it is made available to every citizens. Okay, so just building on the last slide, we have defined the retail and the wholesale CBDC. But the trend that has been happening around this phenomenon is the fact that the retail CBDC has been common among the central banks in the emerging economies, and for several reasons. Why the wholesale? I mean, most of the pilots experiments you've seen around wholesale has been in the advanced economy. And if you look at the use cases that has been tested in most of these pilots for retail CBDC, which is the version of CBDC that is made available to the general public. It has been about financial inclusion and also things like micro lending, programmable money, and providing mobile wallets. So it has been about actually solving existing problems in retail domestic payment landscape. So, and that has been common among the developing and emerging economies. And you will see more of that in the upcoming slides. But around the wholesale, where the use cases has been things like the interbank settlement, the real-time gross settlement improvements, and cross-border interoperability and payments. So, such experiment has been common around among the advanced economies. And that's because the cross-border payments has a lot of pain points that needs to be solved. And also because most of these advanced economy, they already have a very advanced domestic, retail payment system. So in terms of benefits of central bank digital currency, they are numerous. Too many benefits to ignore. But the screen, the slide we have on the screen talks about 12 of them. And I'll just start from the last one. I mean, you can think about the environmental sustainability. Reducing the carbon footprints, environment friendliness. Then you can, even in terms of improving local currency traction, fighting dollarization. So most economies have been highly dollarized. The CBDC will help to reduce the effect of that. Cross-border is also in the front burner to stimulate economic growth. Of course, currency serves the purpose of lubricants. They are like lubricants in the economy. To make economic activities more, more effective and more faster. So, and also discouraging illicit activities, reducing costs. Deepening financial inclusion is a major one that is always important because most of the bankable adults are outside the official financial system. So we can continue to list them, but I'll just go to the next slide to show a different perspective to some of these benefits. That's when you're looking at them from from who is benefiting from this. If you look at the economy as a whole, if you look at what the government is benefiting from this, and then if you look at other stakeholders, just another way of presenting these benefits. So, but this is all these benefits, as many as they are not, CBDC has not come with only benefits. It has also come with challenges. I mean, quite a number of risk that has to be taken into consideration when looking at CBDC. And that's why you notice that all central banks have been taking a careful approach into the design of CBDC. So very high on the list of such risk is the possibility of disintermediation of the existing financial system. I mean, so unless you have taken into consideration and you have balanced the design objectives very well, there is the possibility that you could have a run on the banks. If your CBDC happens to gain a lot of adoption. And that's why the second one that is talking about miscalibration of government involvement is actually still talking about the delicate balance. I mean, ensuring that every stakeholders, including the private sectors, are carried along to ensure that CBDC does not actually offset the existing balance, which is financial stability. So there's in some jurisdiction, concerns has been raised about privacy. I mean, a survey that was carried out in Europe shows that a lot of citizens have prioritized privacy over convenience, over other benefits that CBDC may offer. But it will interest you to also know that the same survey carried out in China, gives an opposite perspective. Many people in China have actually prioritized convenience, faster payments, cheaper payments over privacy. So, and that will take us to the discussion around the reason why CBDC design is actually, it varies from, it's dependent on the jurisdiction that you are looking at. There's no one size fits all. So there's the concern about the technology vulnerabilities and design errors. Of course, every new thing, unless proven to be safe, have the potential, to break, because only history will prove something that is secure. But we are learning very fast. CBDC design considerations. So, so just like we're saying in the last slide, designing CBDC is actually about balancing competing objectives. Some of those objectives basically are the advantages, the pros and the cons that we have looked at. Every central banks have to look at their the uniqueness of their jurisdiction and their economy, and also the need of their people, and then be able to design their national CBDC to meet their specific need. So that's why the issuance and design of sovereign of CBDC is actually a sovereign decision, something that is, there is no bandwagon effect in this one. Is actually a choice of different jurisdiction, and something that is not something you can copy entirely. So, but the knowledge around the CBDC has advanced significantly because there's been so many experiments, so many papers written, so many research carried out. If it is gotten right, if it is done well, there's so much that we can benefit from such sources because CBDC can complement the existing payment instrument that we have today. And it could even give us a more resilient and diverse domestic payment system. So, and so many opportunities that does not exist today, CBDC can bring them. So still talking about design, there has been some agreed upon principles. Even though it was not possible to give a formula that every central bank can go and apply and get the CBDC right. But at least there are underlying principles that central banks globally have agreed upon. And that's the fact that, those are the three we have on the screen here. The fact that central banks should not compromise financial stability when issuing CBDC. That's one. And the fact that when it is issued, it should coexist with the existing forms of money. And the third one is that it should support innovation and efficiency. So this slide is looking at some level of details when it comes to designing a central bank digital currency. And these details are provided around the system, the instrument, and the institutions. So in terms of the infrastructure that we carry, on top of that the CBDC will ride upon, it is expected that such infrastructure should be secure. Of course, in terms of the speed of transaction, it should be instant. And when I say instant, I'm talking about instant settlements, and it's not just instant payments, because we have instant payments today whereby the payments, the customers can receive immediate value, but then the settlements happens later. The financial institutions have to carry out settlement sessions in order to reconcile their books, and they have to put infrastructure and process in place to achieve that. And some of those costs are being transferred even to customers. So, but in this case, we are talking about a situation where the settlement operation and the payment operation are merged together and they become one. So there's no separate settlement operation, just both happening at the same time, instant. Such infrastructure needs to be resilient. Resilient to both operational and cyber failures. It has to be available. It has to, the throughput, it has to support, high throughput in terms of transactional volume. It has to be scalable, and it has to be able to interoperate with existing payment infrastructure. It has to be flexible and adaptable. But in terms of the instrument itself, it has to be convertible, convenient, acceptable, and available. It has to be low cost. So these are some of the core features that at least that are guiding the central banks in the design. And the last category of the features is actually the institution itself. I know that ISACA is an industry body that talks a lot about people, process, and technology. So we also have the institutional aspect of this, which is the robust legal framework. This is not just about technology. the standards have to also be in place. So each jurisdiction have to figure out the right legal framework and standards that works for them. So this pyramid is just another attempt by the BIS to structure and to help the central banks in the design of their CBDC. And it's actually talking about 4 design choices that central banks have to make. So starting from the bottom of the pyramid to my right, to the right of the screen, the most important one, I mean, to start with is actually the architecture. I mean, the architecture of the CBDC, and that's speaking to you are doing a direct or indirect CBDC. I mean, whether you are issuing direct or indirect CBDC. Then the other choice you have to make is the infrastructure. I mean, whether you want to use a conventional technology or you are using a distributed ledger technology. And the next one is about the access method, the way the citizen will be accessing the CBDC. Is it going to be account-based, or is it going to be token-based? And finally, the interlinkages, which is at the top of the pyramid there, is actually talking about whether you are going to make your CBDC available only domestic, or you are going to extend it even across border. So that's what this pyramid is all about. Just something provided by the BIS. Okay, so on the screen is another very popular what we call the money flower, taxonomy of money. I mean, from the BIS too. I mean, this money flower actually tries to put together different forms of money that you can think of and how they overlap in various ways. But just for the purpose of our discussion, you will notice that we have the central bank digital currency in those areas shaded gray. And you will see we have the account and we have the token types. We have, of course, the general purpose and the wholesale. Just based on the overlapping quadrant there. Okay, so this is sample model for what you could have for a CBDC stack. I mean, the fact that you have the core ledger and then you have the API. I mean, this is talking about some kind of, I mean, the way the infrastructure could look like. You have the core of the CBDC infrastructure, then you have the application programming interface that exposes and give access to additional values to be built on top of that ledger. And that's the area where private sector and fintech play a lot of role to build innovations on top of this. Then finally, you have the users. I mean, that's just an idea of what you could have. Then in terms of this slide, we get a lot of questions about how CBDC compares to cryptocurrency. I mean, if we ever need to, I mean, to provide this kind of differentiation, is actually around the issuance, the legislation, and the liability. I mean, the fact that I mean, central banks are responsible for issuing CBDC, and of course, CBDC is backed by the law, and it's a liability of central banks, which is what cryptocurrency is the opposite. Because I know that it's difficult not to have, not to talk about cryptocurrency when we are talking about CBDC. Okay, so this slide is showing a snapshot of what's happening around the world. Just the same thing we've been talking about, but just to put in another perspective, how CBDC is moving around the globe. And you will notice that Nigeria is categorized as being in retail. Retail pilot ongoing. This is also from the BIS. And this slide is showing how more central banks are moving away from just theoretical research. They are now moving into experimental work on their CBDCs. So talking about the various design options I had mentioned earlier, the architecture, the infrastructure, the assets are the interlinkages. This statistics is showing the distributions of various central banks at the stages where they are, and the approach they are taking, the design choices they are making in terms of designing their CBDC. Of course, there's no name of the countries or central banks here, but at least the statistics is showing what type of CBDC they are building. Now, it's time to come back home. Let's talk about our own Nigerian CBDC. I'm sure that one way or the other, you must have been involved in a discussion regarding the Nigerian CBDC. It's been everywhere in the recent, and I think it started when the central bank governor this year actually made an announcement at the bankers committee this year, since then, the central banks have been very devoted to ensuring that Nigerians get the best from this development. So in terms of the enabling law for the central bank, if you want to know why we're doing this, how or what law is backing the central bank, actually, if you look at the CBN Act 2007, Section 19, it talks about how the central banks can issue money in any form, or design it, or carry it on any devices once it is approved by the president and based on the recommendation of the CBN board. That's what this is talking about. And that's why the central bank digital currency called Project Giants has taken off. And the name of the currency is E-Naira. I'm sure that's a very popular discussion today. And if we need to look at, why exactly we're doing this in Nigeria, there are also so many reasons why we are doing this, because like we said earlier, the benefits are many. The benefits of a CBDC are very many. Of course, one of them for Nigeria is the microeconomic management and growth. We need to grow our economy. CBDC is another monetary policy instrument. For central banks to implement the monetary policy. Financial inclusion is on the front burner. Large number of bankable adults in Nigeria are outside the official financial system, and we still need to do a lot in that area. Our payment system is still, can be better. And we know that remittance is of high interest. We have a lot of our people in the diaspora. And today, remittance is a pain point because it costs so much, it takes so long, and it's even difficult to know or to be able to even provide information about the status when you are expecting payments in terms of cross-border. So it's an area that requires a lot of improvements. So targeted social intervention is a very critical area for us in Nigeria. We will remember that as a matter of necessity, we had to do this during the COVID pandemic. Governments have to reach out to the vulnerables. And you will see in the upcoming slides how some of this, how difficult it was for some of this to be achieved. So, and just what I was discussing, you can see this is government palliatives, and this is a snapshot of some of the things that happened during the COVID, the last COVID pandemic, when we have to, as a government has to reach out to the vulnerable public, and people have to carry money physically across the country. And that could be, with CBDC, that could be better done. Remittance, we know that every Nigerian abroad, their heart is at home, and they always want to reach out to loved ones. So this is an area that Nigerian will benefit a lot from. And today, the cost of remittance is so high. The cost of transaction is about 8.2%. So which is even making it impossible for you to send micropayments. You can't send more money because the cost of transaction is just so high. So just like I was saying about financial inclusion, this figure, 39.5%, if it has not changed, that's an estimation of how many Nigerian adults that are still not enjoying robust financial services in Nigeria. And of course, the private sectors are getting better and better in terms of providing a fast and convenient means of payments. And central banks too have to up their games. Cost of managing cash, just like we said earlier. So it costs so much to print money. It costs so much to transport it. It costs so much to distribute it. It even costs so much to destroy it. So that alone is a big reason for central banks to actually digitize cash. Not even mentioning the fact that cash was also seen as a risk of COVID-19 agents during the pandemic, that cash could also transfer these diseases. So corruption and money laundering, this is an area that CBDC will help a lot, because CBDC is one type of money that does not encourage illicit activities. So now let's come to the journey of the Nigerian CBDC proper. Okay, so at this point, I think we have to understand that CBDC globally is a journey and not a product for any central bank. It's a learning journey, something that every central banks have to gradually approach and improve and advance. So for the Central Bank of Nigeria, the focus of the project for the initial phase is actually around micropayments. I mean, providing Nigerians with low-cost transactional platform and instant and low-risk payment system, then a catalyst for digital economy. Now, just before we leave this page, I'd like us to bear in mind that the Nigerian CBDC is actually just our normal cash, the cash that we have in our pockets, not the one that is in the vaults of the bank, but the cash we have in our pocket, just in the digital version. So what the central bank is doing at this point is actually helping the citizens to create a digital pocket to, just to keep your, and transfer your digital cash. Because even though other electronic payments have been very useful, but cash has a lot of advantages, and there are sufficient reasons why, even in a more digitized world, there's need to continue to have cash. And we can have more discussion about that as we go on. Okay, so talking about the E-Naira design. E-Naira is designed for all Nigerians. And if you have observed the E-Naira project, it has been highly consultative. We have been moving based on feedbacks. We've been getting a lot of feedback and going back to the drawing board and ensuring that all Nigerians are carried along. And as a component of that, of course, a wallet has to be designed. The E-Naira CBDC wallet is called Speed. And of course, the currency itself is called E-Naira. And in terms of the design, the target design parameters at the moment, if you look at the last image to the right, it's talking about what the E-Naira is designed to be. And the E-Naira is just a legal tender. It's not another form of money. It's the same money, the same cash you have ever known. And that's why I was trying to explain the other time is that it's the cash in your pocket. It's actually not bank deposits. So if you are, I know there may be questions about where this lies, but actually it's in your pocket. If I may answer that from ahead of time. Parity of value, of course, if it's the same Naira, the value is the same. Of course, we mentioned about how it has to coexist with existing forms of money, all other forms of payments. The approach CBN has taken is a two-tier approach, something in between the wholesale and the retail, something that is riding on existing financial system. So the bank, of course, for the objective of the E-Naira, both the banked and the unbanked, in fact, the unbanked are a priority for these projects. In order to ensure financial integrity, some transaction limit has been put, all the necessary anti-money laundering requirement has been put in place. Of course, we talk about how CBDC has to be an instant settlement, and the safety of money. That one you can be assured of that. Okay, so we are running towards the end of these slides. If in case I'm running out of time. Okay, so
yes.
I guess that's much.
Let's attempt to round up. Thank you. Let's attempt to round up.
Okay, so we're almost done. So this is showing how the CBN is actually working with other financial players. CBN is not doing this alone. It's not a CBN thing. In fact, this is designed around the banks and the other intermediaries in the financial system, the fintech, the everybody, and then the customers is the end beneficiary. This is saying the same thing. in terms of the wallet tiers, the wallet categories, I mean, different Nigerians will be able to come on board based on their category and based on the information they have. For the unbanked, people that don't have the existing bank account and don't have BVN, with their phone number and also with their NIMC, the NIN, they will be able to be onboarded. But of course, there are limits in terms of send and receive and the cumulative balance. Why the bank too, the people who already having banking relationship will also be able to ride on that existing relationship to onboard their wallets. The merchants will be, we will be able to go to merchant places, whether Jumia, Kunga, online, buy things, and physical merchant places to buy things. In terms of the onboarding, so this is just showing how you can just download the Speed wallet when it is available, and then you provide your information and your wallet is activated. After which you will be able to send peer-to-peer. Okay, so the first thing you have to do is actually to fund your E-Naira. And you'll be able to do that. If you log into some of your bank mobile apps today, you will see an option for E-Naira to fund your E-Naira today. And that's the first thing you will do, after which you can do peer-to-peer with anybody, the same way we do peer-to-peer with physical cash. And that will be it. After that, you can of course now even convert your E-Naira to any form of money you want, or anyone can send you money from E-Naira. And that's it. Thank you very much for listening to me.